Hey, it's Connie from Prosperity Finance. I hope you're well. Sharing the best financial tips so that you can be more successful with achieving your financial goals. Now, recently we had a client come to us to ask for help to help them get a finance to buy a rental property. Now, they have been to their own banks. They have two property already. One is home, one is rental. And they went back to their same bank and asked for pre-approval. And unfortunately, the approval amounts is much less than what expected, and it's not enough to buy anything reasonable. So they come to us. Now, what we noticed that the client has good equity in the property, especially in the home, but that bank who holds the equity can't give them enough lending. Whereas other banks, they have a different lending rule. With the same income, they can lend much more, like 500K more. So that'll be more than enough, right? However, they need 20% deposit. Client doesn't have a 20% deposit in cash. However, they do have equity with this bank. So we need to make sure the equity kind of shift to the other bank who can lend them more. That way, they can be success. Now, when they have two property or more with the same bank, we have to firstly refinancing one of the property which has equity, refinance to the bank who can lend them more. But that means it will take longer to get a pre-approval for the rental property. You need to complete the refinance and then get another pre-approval. So it's a two application instead of one. Now, you may wonder why we can't ask the new bank to provide approval for the new rental plus the refinancing amount. Now, you can't really do that when you have multiple property with the same bank and you're trying to do a partial discharge. Now, when you do the partial discharge, I mentioned in the previous video, the bank needs to reassess your situation. They need to know two things. One is, what is the remaining security value? And make sure that remaining loan balance is within their LVR range. Now, more importantly is they need to test your serviceability. They normally ask for a copy of the approval from the new bank, and then they will consider what is your total lending, and then they decide if they can release that property. Let's say you can be approved for $1 million to buy the new rental property, subject to you refinance 500K. If you don't do the refinance first and you get a $1.5 million approval subject to refinancing, then your current bank, once they see that offer and they see that 1.5, they may not approve the discharge because they know your total lending is, it's $1 million more than your existing lending amounts. Now, in that case, they will decline you or ask you to take more loan with you because they feel it's riskier. Right, so the worst scenario is you already unconditional purchase the property and it's within that pre-approval range, but your current bank won't release your property. Therefore, you can't meet the condition of refinancing only 500K. Therefore, you may not be able to purchase the new property. So you may have to face penalty, interest, etc. That could be a disaster. So we typically need to refinance that 500K first. Now, as long as you don't increase the new lending, you're more likely to be able to, do the discharge successfully. We obviously will do that partial discharge test first and make sure they can prove the discharge. But that just means it's just taking longer because you have to do that refinancing application first. So maybe a month's additional time before you can get the pre-approval. Now, the second thing is, if you get the pre-approval for the new rental plus refinancing, the entire 1.5 mil lending will be treated as the new money. Now, it's a different lending rule for new money versus if you settle first and your loan, the refinance loan, has their own rates and loan term, etc., they will use the actual kind of rates and term instead of using test rates. So potentially you can borrow more if you refinance first. So that's why we recommend that if you are thinking to borrow more, but you currently have more than one property with the same bank, and that bank, may not give you enough lending, it's best to split them as early as you can. And we can time it perfectly so that you don't need to incur a lot of costs. For example, you know you're going to, your loan is coming off fixed term 6 months, and you're not in a hurry to buy the new property. So maybe we have that strategy meeting first and understand what you need to do to get ready. And then we can set the settlement date to in 6 months' time so that there's no break cost. But in 6 months' time, you split your lending with the different banks and get ready to do the approval after that. So yeah, I just want to share customer experience because I don't want you to do the same thing and experience months longer. It's important that you get the current loan structure right. If you are not sure, it's best to get in touch with us, and we're more than happy to do a review on your existing lending to help you get ready for the next one. And it's all free, so you don't need to feel the pressure. Right, thank you so much for watching. If you find this content useful, please feel free to share with your family and friends so that they can benefit from that as well. Until next time, take care. Bye-bye.